Okay, here we go. So I'm starting from scratch. ES 1 minute chart, um, front month contract. Put 90 days on it for now, and let's do. I like the default times here for these to be 1700, 1559, 59. I'm gonna turn that off. Oops. All right. Um, all right. And then the next thing I want to do is, so let's duplicate the chart. What I want to put on this one is VX. So for the SR bands, we're using volatility indices. We've got these CBOE global indices. It's like, I don't know, what is it, $5 or $6 a month. So you have a bunch of things. Again, you can take this idea that I'm going to do for ES, and you can take the appropriate volatility index and play with a bunch of other products. So we do VX. Now, right now they're a little bit data limited. I did 130 days or something like that on there. But all right, you can go with the VX 1 minute chart. I think you'd actually do a little bit more uh, coarse grain if you want, but stick with that. All right. And then we want to do SR bands here. So daily volatility chart number. Now, again, you can use a daily chart as long as you're using the intraday chart type, but 1 minute chart works just fine. And I'm just gonna hit, let's see, hit apply here. I'd say you can check that this is right by looking at the time should be adjusting. It should be changing the bars here right at 1700. So, all right. The idea on this study is we're using these volatility, the volatility index data to get levels, looking for support and resistance. Um, it not exactly fibs, um, but again, it sort of extension levels. So I just have the first three inner ones on. And if you'll notice here, we'll see if we play with this at all, but I've got this option to do a long signal or a short signal, which is basically, this will trigger whenever you have bars that go into these and go into the SR bands. And the idea there is that you may want to combo with other signals that you have or other execution tools or whatever you may want to combo. So this would be more looking for combos inside the zones, from below and from above. But all right. And the next thing I wanted to do here was we can look at you know so let's add, what do we want to do? So for a basic, so for what I want to show is the signal series ultimately, but we've also got, let's just do something simple, which is just what does it look like trading mean reversion off of the one of the bands, the inner band, let's say. So again, I've got the option to fire a signal. I can turn it on here for you to see it. Let's do like point on high, and you'll see it triggers. It's going to trigger every time you're in one of these bands. But that's not what I want to do. I'm not looking for a combo right now. I want to simulate just if we hit the band. All right, and so I want to do prox and set so this signal subgraph proximity is, the idea here is can we see when we touch a level, and or when we're close to the level. So that's why this proximity width. So this one you can see here if you're, I don't know, if you're like 20 ticks away. Or if I set it to 20, you're gonna see a bunch of little yellow bars pop up when you're within 20 ticks of the level. So this I'll probably change, but it pipes out. This is which one it pipes out to. It's just convenience, but pure proximity is fine. It doesn't make any difference whatsoever. Sorry, and this would be, let's do 1B resistance band bottom. So so the bottom of the first band here. So again here, yeah, on 20 and proximity style. And for this one, since we're going in, and let's make this the cell band touch. I'm going to make this go previous bar below. So we're touches of this from below. And I actually only want this to be 0. So again, you can see the slight yellows there. That's working right. Use time interval. And so, okay, so I've got, just to go through this study again, a bunch of bells and whistles. Basically, the idea is, are we hitting a level? Or are we close to a level? And if so, this will fire. And there's an option here that you can play with for, I have a bunch of different potential applications here, but you can limit to only triggering a signal if you're within this session times. Requiring it to be locally constant is something where if you're not wanting to, if you want to hit flat levels rather than something that's moving around every bar. And then this use time interval is you know, how frequently do you want it to trigger? So this 60 minutes would be triggering once every hour. So, but if I did it, I don't know, 5 minutes, you'd see these fire more. But otherwise, again, this is like maybe you don't want it to fire every single time it touches, because let's say it chops around the level. You don't want your signal to be going crazy. So I don't know that we need to use this right now. The stats collector, I can have it go one at a time. Let's say when we plug it into that, so we can limit the sort of the over trading here. Yeah, I have it only take, you know, one simulated trade at a time. Okay, so that's the cell band touch. You can see it's only firing when we've intersected that band. So let's duplicate this study and we'll do a bi-band touch. And I want to do previous bar above. So we're coming at it from below, above, and then 1A support band top. And then we can just look at these and make sure, again, it's firing right there when it touches that level, and this one, it's firing when it touches that 1B band. The other thing we might want to do is to set a mean reversion target. And so a natural mean reversion target would be the midpoint here between these bands. And so of course you could also have it try to, you know, ping pong between the two, but to keep it simple for now, and you can also target, I don't know, we could also target VWAP. We could play around with some of these things later if y'all want, but again, to keep it simple, I would say let's use some Sierra studies. We can do study subgraphs average. And what I could do for the average is average the SR bands. Really, any of these would work, but being consistent. So the resistance band bottom and the support band top. And I want that to be on chart region 1. And let's make it white. All right. So that'll be the midpoint will be our daily mean reversion target. And caveat, I have no idea. I've played around with things like this before, but I don't, you know, we'll see if this one's a winner. The goal is really show y'all how I wire these things together, and how the idea here with a lot of these studies is we're going to give you all a palette to be able to express your own trade ideas. And again, this I think um, we've got some fun stuff, but I think this signal series is incredibly powerful for just helping you plug multiple signals together, plug these levels, level touch based um, signals that are staple of intraday trading, and together with execution tools, together with again, we have some things that we'll get into in a minute about looking at applying filters on these, so we can look at, let's say, the higher time frame trends, and then we'll look at the back tester and see if see if we can't find something cool, and also a chance to look at some things that are, again, not so some of the bad things you can do. Sierra gives you a lot of flexibility that you don't get on other platforms like TradingView, and so with Sierra you can definitely get yourself into some situations where you have look-ahead bias and whatnot, which is a little bit harder to do with TradingView because you're much more restricted. So again, we've got the SR band set up on VIX. We've got the midpoint, um, which is really the session open. All right, and then the sell band touch signal, the buy band touch signal. All right. So I think the first thing to try, so let's just throw the stats collector on here, and we'll look at if we did something naive. All right. So I have, for those of you who haven't used the stats collector, definitely one of the more complex things we have. A lot of bells and whistles here, a lot of different things you could do. And one of my goals here with these office hour sessions is really spend a decent amount of time on showing what all you can do with this, and helping people get a feel for, again, wiring this stuff all together. And I'm continually iterating on things. So again, if there's things I could do to make this more intuitive or simplify menu options or whatever, I also I'm interested in figuring things out like that. And if there are other features that are not present, this has a lot. There's a lot, but let's start simple here. You have two different signal types. One is on bar close, which is definitely safer in most use cases. Is really what you want to do. And if you're worried about too much slippage or whatever, get on a more granular chart and use on bar close. But on proximity is really for level touch based signals, and you got to be careful with this one if you're using on prox for some of our signals. Sometimes the signal price is coming in at like the low of the bar, and so I've seen back tests that look crazy good, and then you look at what the person's doing, and they're using on prox when they should be using on bar close, and it's giving them an unrealistic entry, saying like, oh, you got the nut entry at the low of the bar going long. So again, to be careful on those for this study, because it is level based, we're going to use on proximity, which simulates, again, if you had a limit order sitting there. And the thing to be aware of with limit orders, especially if something's like taps the level barely and then rips, you're not going to know if you got filled or not. And this study's you're going to be assuming with this study that you got filled. So something to be aware of. Also something that if you've got if it's a limit order based strategy, you are going to have to worry about things like fill rate. So but hopefully this gives us kind of a decent ballpark. So the signal subgraph, as I said, buy band touch, and I'm going to get rid of this feature. This is going to be a proximity signal, period. I'm going to get rid of the proximity buy sell, but right now we'll just use that one. So buy band touch, bracket stop type. So I have a couple of options here: tick based, subgraph based, or you really don't have to use one necessarily, and that's the first thing that we could try doing, is just not using a stop, and use this would be then a more typical mean reversion strategy where you're going to take on a lot of negative skew risk to get a comparatively small return. and hoping that the sort of consistency and high hit rate on that more than compensates you for the skew risk you're taking on. But I don't know what this will look like. That's what we'll do. So that being the case, I'm not going to use a stop right now, and I am going to use a take profit. Now, risk reward based only makes sense if I have some kind of a stop in, and that's going to let you do some, predetermined multiple of, again, whether it's tick based or whether it's based on a subgraph. We can look at subgraph based stops in a minute. We have another study which I'm very proud of, is this PA zigzag, which is a cool one for we'll play with putting a dynamic subgraph based stop on here. But for now, I'm going to say we're going to do a subgraph based stop, and we're going to aim at the mid session open average here, that white line in the middle. So all right, touch the buy band, aim at closing out with the mid. I'm not going to use an exit signal. This would be something for, like, if you have a moving average crossover or something like that you want to get you out of the trade, or you crossover VWAP. So you could put in subgraph base and plug in VWAP. That's going to give you the time of VWAP at the trade entry, because I don't have. But if you have some sort of like moving stop that you want to mimic, this is what you're going to want to use. So you'd want to use something like an exit signal. But let's leave that blank for now. The short signal we're going to do again on prox. I want to do no subgraph. Wait, let's see. So on prox, sorry, the signal subgraph being the cell band touch, pure proximity, as we said. Again, skipping the stop for now. We'll play with putting those in a bit and see how that affects things. I will have to say that, like, speaking of bad things to do when back testing, is everyone will tell you back testing is not a legit form of research. But so again, be careful. But everyone does it. We all will play around with stuff and say, I think this is a good idea, and twiddle knobs until you find something that looks nice. You just got to be careful with that. I do think everyone does it to some degree. I don't know how else you do research. You should have a thesis, but we'll talk about some of the things we have here for checking robustness. And I think the big one is expanding your sample size, do in sample, out of sample testing. And then the other big thing would be if your idea works broadly on different instruments. I think that's also a very good, confidence booster, let's say. Okay, so one more time. Buy band touch is our entry signal for longs. It's going to be on prox because it's going to enter at the level, or that's going to be the simulated entry. Again, careful limit order based simulation. So there's probably some boost you get from doing that that's slightly unrealistic. Subgraph based take profit, where we're targeting the average, this midpoint. All right, same thing on the shorts. You're looking at a cell band touch, subgraph based, and then we're targeting the average. So again, if y'all have any questions, if I'm going too fast, if you want me to go over something again, punch it in the office hours chat. And to answer Trader Oracle's question right quick on live trading sessions, y'all are welcome to. I can make a channel for people to do that here. It's not my game, but if y'all want a channel here to do, for the I do that. This one is a subscriber only channel where it could be, anyone could talk if they wanted and share screen and look at this stuff together. But I again, not my game, but if that's useful for you guys, I'm happy to provide that space, and I would love to see people here sharing sharing ideas. 1 second. I'm seeing. Sorry, let me look at this. Sorry, it's Pravesh. I guess he should be good to go. We're supposed to make a verification ticket, but you should be good to go on posting now. All right. But yeah, so to answer your question, Trader Oracle, the live trading sessions, I'll definitely make a channel for you guys to do that. I'd love to see people sharing the stuff that they're finding, and playing with the tools together, helping each other out. I think again, this stuff is Sierra Chart's complicated, and we're a complicated set of tools within Sierra Chart, and we've got some people here who are very, very, very good at this stuff. Um, and the best thing is to learn from each other. So hopefully this helps. But yeah, happy to provide that. Um, all right, let's see. Trade sizing. And this is one of the features I haven't really played with on this, but you may make something where you could set your number of contracts based on a subgraph. Not gonna do that this time. All right, max number of open trades allowed. So we're gonna do one at a time right now. Um, and behavior on opposite signal. I'm gonna say if I'm in a long and I run into a short, just close it out. For right now, we're not going to do daily trading times. Um, Entry slippage you would not use on a limit order based strategy, and I also don't have a add to limit order. So I'm going to say no on these right now, and we can play around with putting in uh, trade costs. But again, not really. Where it's ES, so it's very cheap. So there's some products where you really want to be careful with that. So on UB, for instance, where um, it's a tick. If you're crossing the spread on UB, it's pretty big. And if you're looking for, maybe we can look at some of these later. But these are definitely, if you see something awesome on your results, you should be skeptical, especially if the Sharpe ratio is over like 2, and really if it's over 1. It's very, very hard to find things in this game. So, but particularly, you can find lots of great ideas in UB, for instance, where the results are entirely due to not accounting for slippage. Um, uh, let's see. Pravesh saying, when Vespa and Delta post SR bands from Sierra VIX auto data, it's different from if you manually input the volatility close of VXN. They may be using for VXN being for NQ. Um, so it could be that uh, they're using a different close. It could be using settlement close versus session close. Could be one thing. I know Delta likes the settlement close. So basically, the latest you get. Um, or let's see, the other thing, it may be a chart setting thing. Again, I'd have to look at their charts versus what you're doing, but it should be the same, um, unless there's a different, unless there's a problem there with time of day or. Um, okay, Ando says he inputs it manual and it matches. Yeah, I can. Let me see. Y'all should be able to
I would
post.
also add that the value that is being used is on the chart. I have like a text uh, from the other chart. So
Okay.
I,
Okay.
I'd be curious if you get different results with the same VXN value.
Okay. Yeah, maybe we can look at that, but it should be we can put that on for a second. Some settings that can mess it up, says Ando. Um, let's see. So this guy is not. Um, uh, this is not doing anything. Let's see. So what am I doing here? All right. So I punched it in. Display prices. I want to see all the trades. Copy trade drawings. So let's figure out why this isn't doing anything. Um, hmm, let's see. We'll do use in daily trading times, but here I want to start it earlier. So let's say I'm not holding past the close. All right, there we go. Holy shit, that's a good Sharpe ratio. Um, let's see. Um, Now again, doesn't a little bit more positively skewed than I'd expect. So okay, so again, another thing to do here in back testing should sanity check what's going on here. So this is a painful loss day, but looks like it's behaving right. Again, entering here, stopping out here at close for a fat loss of something like, what does it say, $1,500, $1,300, something like that. No, 1,675, 1,675 bucks. So, and again, I have some metrics here. One of the things that I'm curious on why it's doing, why I would have, again, so sanity check your stuff, right? I'm curious why do I have 3 trades per day on average? Well, I guess here you can get some kind of wacky. It can hit, take profit, hit, and so again, there's a good one. Um, but it looks like it's behaving. It's behaving as expected. Now again, that Sharpe ratio is a little. I'd be a little hesitant on something that high. Maybe it's amazing, but you've got 89 trades. Let's see if we can up the number of days on the chart. Um, so we got 90 days on the chart. Why do I only have 35 weekdays in sample? What's going on here? Oh, you know what I'm not
You
doing
have
here?
to,
Yeah, I didn't roll. I
yeah,
didn't
the
use the.
rollover.
Yeah. I know. So okay, yeah, volume-based rollover. That's because we were starting from scratch. Thank you. Okay, so let's see if this brings it back down to earth. Yeah, I'm gonna say if you find something with a Sharpe ratio over like 1.5. Okay, so here minus zero point 0.2. That's a little bit more like what I would expect of just trying something off the cuff. Again, you should always be really really skeptical, especially when things are awesome. They look awesome. So I can't tell you how many times uh, I've gotten super psyched about something and realized I have a look ahead bias or hadn't plugged in the wires right. So here's a start, and it's about what I'd expect in the sense that like it's negatively skewed. That was the other thing that was making me skeptical. Another one is I shouldn't see if I'm doing something where I'm taking on a ton of risk to get a little reward. I should see negative skew here. Um, and All right, so a first pass, we can see what we could do to make this fit our risk tolerance a little bit better. Maybe throwing in stops, maybe throwing in filters here. Um, let's see. So yeah, with respect to Pravesh, with respect to the SR bands matching, not matching, I have to take a look at your chart. You can send it to me in DM or whatever, and I can look at that. I can look at that later. We figure out what's going on there. But like Vespa said, if he's posting the number you should be inputting, it should always match if your charts are set up the same way. So that is the caveat there. Making sure your session times match. Probably the problem. Okay, so first thing, let's do this. Let's play around with actually putting in a stop there, and let's use. This is a good chance to use this PA zigzag study. Which, let me talk through what's going on with this guy right quick. Let's see. All right, so PA zigzag is I'm basically using it's effectively a volatility volatility measurement study looking at looking at zigzags, right? So I'm using like zigzag calculation 2 or whatever from, you can look that up on Sierra's zigzag study, and they even show you what the code is and what their reasoning is there. But what I'm doing here that's special is, again, you can set these just like you do for the zigzag on um, Sierra charts zigzag study. Same thing, high, low, however you want them, but I'm using high of the bar, low of the bar, and the the thing I'm doing here though is I'm taking the statistics of these zigzag rotations and I'm taking averages of them, and I also have options to take averages of other things like the delta on the on the rotation on the um, we got a bunch of things that we're looking at here potentially, and grouping them here. I think the cool thing is we can group it by time period, group it into buckets, time of day buckets, which you can see this. This makes sense if you think about it. Is that you see these intraday volatility patterns very consistently, and basically every product is you're going to get a ton of volatility on the open because you get a ton of volume on the open, and volume and volatility kind of go together, and then you get a midday lull, and then you get some kind of an end of day spike, and then the off RTH hours, for instance, for ES is a little bit more of a lull. You get a spike at Euro Open. There's a bit of a volatility pattern for Euro session here. And the idea is I made this so that you can take these measurements of volatility and as measured by rotations. Again, there's a bunch of ways to skin the volatility cat, but rotations being a reasonable one, they're pretty equivalent. And I'm doing this so there's no look ahead bias. So this is the averages for this 30-minute block of the day, um, up to and not up to, but not including today's data. Because again, one of the things Sierra lets you do is Sierra would let you do things like throw in the answer from today in there, and it wouldn't change it a whole lot, but you'd be surprised how much it can boost your stats of just a little something that's like a little tiny incremental bit of cheating. So this is not cheating, and I want to use this. So again, you can have I split up and down rotations. We're not gonna mess with those right now. I'm just gonna keep it simple and do it all together. But my idea here would be, all right, I'm looking at this is the usual volatility for this time period of the day. And you can also group this is a rotation starting at this time of day because you could have a zigzag rotation that, I could group it either by do they end in that time of day bucket or do they start in that time of day bucket, if that makes any sense. So these start in that time of day bucket. I'm going to say what's my expected, what's my expected wiggle here in this time of day, um, and between sessions, sure, let's throw them out. So something so I'm not going to get any wacky numbers for like gaps over the weekend or anything like that. So, but all right, and you have other options. You can do, no grouping or whatever, and it's going to smooth it all together. But I like this. I really like this time of day feature. Particularly if you're trading intraday, it would seem like something to pay attention to. All right, so what I'm going to do with this PA zigzag is I'm going to make a stop based on this. And we're going to do study subgraphs, add and subtract for this guy. So to make a stop for the buy band, I am going to here. So I'm going to say all right, a dynamic stop here for the buy band, and I'm going to, sorry, not study subgraph, subtract, I want study subgraphs, difference, subtract difference. So, all right, so the first one is I want to take the SR bands 1A support band top, and I want to subtract from it this PA zigzag average rotation. So again, I got a whole bunch of metrics in there, which we can explore at some other time. But this is the first thing to I think the first simplest, most potentially useful thing here is just again the average rotation, and so I'm going to put it on the chart here, and you can see it. Let me make another color. Let's do it like I don't know, whatever. Do it like that. So, So this is adjusted for time of day, going from the top of the band. All right. And the other thing here is, all right, this is, again, what do I want to call it? I want to call it by band stop, and it's dynamic. And then I want to do study subgraphs add to get the other direction, so the cell band stop. Distance band bottom, and I want to add to it PA zigzag, average rotation. Now, and for this one, you could make an argument for saying, well, actually, you should split the up and down rotations. Again, I have the option to average up rotation. I'm tracking standard deviations as well. You can look at z-scores. You can do all kinds of cool stuff with this data. And again, thing I'm happy about is I'm doing it in a non look ahead bias kind of way. So it should be, everything that you know about up till now on the chart with as it would have been at the time of if it was fresh on the chart. Okay, so again, we got our sort of potential stop subgraphs. Now we may move this around. We may make these go off. Let's call this a cell band stop. I definitely recommend, especially if you're doing complicated things, wiring this stuff together, name your subgraphs. It'll save you a lot of pain and suffering. Um, so, all right, now let's go back in the stats collector and we'll see if adding in a subgraph based stop works, or if and how that changes the skewness of the returns. Now it should be positively skewed because now we're looking at risking a little to get a multiple, to get a lot comparatively. So let's put in a stop here, and I'm going to do a bracket stop type, and I'm going to say subgraph based, and then the stop subgraph. So for the buy signal, it's going to be that guy, buy band stop, and the short signal is going to be stop type, also subgraph based, and I'm going to do cell band stop, and that's going on the add. And let's just see how that works. All right, still not a winner, but the thing is, you can see here it does become positively skewed. One of the things when you start putting in a stop, one of the things I'm trying to track is your average return in units of risk, which is, I think, a cool thing to look at. And also, if you're trying to do things where costs become start to matter a lot, like again, ES and NQ are going to be your by far most forgiving in terms of cost. That it's gonna make the least dent in your, unless you're trying to do something super granular. But throwing in costs on something where you're taking a reasonable size stop on the minis. Now again, micro is going to be less forgiving. It's a lot bigger cost per unit of volatility, per unit of risk. But like UV, this can sort of tell you. You can say if you're looking at something that looks good, but you're not getting above a point 10 R. You can start doing the math on that and realizing that you're probably fooling yourself if it's looking positive. So we can also mess around with this here and do how do I want to do this? So let's do this. Let's actually make it, give ourselves a little bit more slack. So this one, buy band stop, should go off the bottom of that band instead of the top. And then this one, we could give ourselves a little bit more slack too. And then I'm going to go off the top of the band. All right, so now we're getting something. All right, we're getting a positive. Again, not what you should do. Twiddling knobs to get good results definitely would be called curve fitting. And but again, if you get a sense for what you can get a sense for what your strategy was doing over a time period. You can get a, I do think, and here you can see, and it is again, you should sanity check these things. Turn on the drawings. I have them off as a default because they can get very messy, but turn on the chart drawings on the um, stats collector study, and then you can see again where it's putting the stop, where it's putting the take profit. And here, now that we have a stop put in, we can be a little bit we can start doing this. We can say, all right, I'm going to use a stop loss slippage estimate. I'm going to say I'm paying on average half the spread on that stop loss, and I don't know what's I put in. It's $3 per side or something like that on the SMB, and probably it's probably a little less than that. But here, look, like I said, just that alone brings it back into it's noise. There's nothing here yet, and to be expected. Again, I think you'll see as you look at this stuff, anything that's simple. Now, oh, and you're wondering why, like, what the hell happened if I'm clicking on it randomly? That's because I'm simulating. Uh, I'm randomly. I'm flipping a coin here based on this spread fraction. So I'm using this average. This is the average spread fraction, and I'm flipping a coin internally based on that, average amount of slippage you're paying. And so you're gonna have, if you have that setting on, you'll see it sort of bounce around But here it's bouncing around, uh, you know, zero. Um, so let's see. Next thing to do. Let's leave this on for now, and before you can also mess around with equivalently. And I'll post this chart book when I'm done if y'all are interested, just to again an example of how this stuff gets wired together. Um, and we can put, let's see, let's put a filter on this. Let's try trend using some sort of a trend filter to say, like, all right, so this doesn't really work, or it's noise, it's break even as a pure mean reversion strategy, albeit one where I'm creating some, it's now it's becoming a proper, intraday trader thing where you're looking for a positive skew rather than, if you're looking at bigger portfolios, we'll do these mean reverting things where you know, take a lot more risk, where you're not putting a stop in, but you're trading a bunch of instruments that can mitigate your drawdown here. Um, Duplicate chart. So let's do it like this. I'm going to make a higher time frame chart with a moving average cross or something like that, and we're going to use that for a trend filter. Let me take all the studies off this guy. All right, and we're going to go to a higher time frame and a slightly longer look back, so that when I'm looking at moving averages, let's see. So I want to do this. I want to do days, minutes, seconds per bar. I'm just going to do 1 day. I'm going to do 1 day. Still intraday. I want my session times to be the ones giving me the bar. So um, and I'll show you here. It's a good occasion for seeing how you get in trouble on look ahead bias in Sierra chart. That'll really let you do some very ridiculous things. Let me put some more time on this chart. So let me double it. Um, and then what we'll do is we'll put while it's loading, let's look at what we can do here. I'll use a moving average. I like exponential moving averages. They tend to be they're computationally a lot simpler, a lot faster, and uh, let's do something a little shorter. Let's do like a 3 day for the first one. I don't know. So again, 3-day moving average coming in on the close price, which here on my session times is going to be like 15.59.59, whatever. So the settlement close, taking 3 days and exponentially smoothed, and then I'm going to take another one. So I'm going to say I'm going to do this one as the fast MA, and I'm going to duplicate it, and this is going to be the slow MA, and I'm going to do this at like 12 days. A 4-to-1 tends to be something that I see people like. Um, whatever. I don't know what color I want to do here. Whatever. Let's do like that. Let's do like that. All right. And then let's see. And then what I want to do is I want to take the difference here. Okay, because I want to see basically my trend filter is going to be fast moving average minus slow moving average. And if fast is above slow, we're going up. If fast is below slow, we're going down. And I want to use that to see if we can filter these bands trades to say, well, maybe if it's not, as a naive mean reversion strategy, if it's, let's say, break even, maybe it's better as a trend entry. Um, so we can try to figure that out. So let's see. Let's see here. So I want to do study subgraphs difference here again, and I want to say, all right. So I want to see the fast moving average minus the slow moving average, and I want to be on chart 1, and I want it to be white, and I want to say fast minus slow. I don't want it to be there. I want it to be now. Oh, sorry, I do want it on chart region too. Okay, so right again because it's the difference. So right. All right. Now I'm going to do something silly here, and I'm just going to go ahead and use study price overlay. I'll tell you why this is silly in a minute, but you will see the dramatic ability, the dramatic effects of look ahead bias will probably show up. So I'm going to take the difference here, let's say trend, and I'm going to look at it on chart region 3. And this is one thing I want to do, containing match, I think. Yes. Okay. So again, another first thing to be aware of: nearest match, containing match. You have to think about these pretty carefully. So if I'm overlaying from a high time frame chart to a lower time frame chart, this is why we've made some of the studies that we have. Is what you're getting here is again, you want to make sure that this jump here is first of all happening at the right time. And second of all, I think what is going to show up is this, 39.25 whatever. It's, I think, going to be about right here. Okay. So, and what's happening here, I can go ahead and plug this in to see if, as a trend filter, what kind of amazing results you get from look ahead bias. But you can already see it it's happening because um, let's look at the value. I want to say chart values window. Wait, so let's see. Chart values window. Let me pull it over here. Let's zoom in. Okay, so fast minus slow, 45.58. So the current bar is 39.46 or whatever, and then the last bar is 45.5, let's say. Okay, let's see where that happens. And bear in mind that's the end of day value. So 45.5. But that's the thing. 45.5 is the correct value at close yesterday. And where do you have it? You have it, lo and behold, right at the beginning. So you're getting a peek into today's end of day trend value early in the day. So you're going to have a problem. This is going to look amazing. I'll plug it in as a trend filter in our studies, and then I'll show you what we do to make it to make the bias go away. But all right, so here's the trend filter, and we have this signal filter study. So I want to put it, and some of these, if they're not working, move the order around. Signal filter is one. I've tried to make this robust so that you can kind of slap stuff on anywhere. Doesn't always, it's not always the case. I'm pretty sure that you're going to want it below, you're going to want the filter below the touch signals, right? Because I'm basically saying, and I may have to move this trend down as well, but let's see. But this would be a, uh, let's see, filtered by. All right, and the raw signal is going to be the by-band touch, which is, as you recall, pure prox. And then the filter is the trend, diff there. And I'm going to allow the signal when the filter is positive, because I'm saying I want to trade with the trend. And so if they're trending up, so that trend signal is positive, so fast is above slow MA, then I want to allow this raw signal to fire. And let's see, and I don't know, point on low, and I'm going to make it, whatever. I don't have our color scheme on here the way I want to, but okay, I'll just do bright green. And let's do that. Filtered by signal. And I'm going to duplicate this, and we're going to do filtered cell signal. Sorry, I want this to be this now to be point on high, and filtered cell. And so the raw signal here is going to be a cell band touch, also in pure proximity. And the filter is going to be diff, but now we want to allow the signal, we want to cell when we're in downtrends. All right. So now we want to plug those into the stats collector instead of the byband touch and the cell band touch. So filtered signal. And then this one again, filtered cell, filtered signal. All right. Wow, so the Sharpe ratio is 1, which is like you would think, wow, that's solid and not dramatic, but there's look-ahead bias, so you're cheating. And this one doesn't have a super dramatic result, but some of these you can get a really dramatic result just on these sort of trend, slapping a trend filter on and not adjusting it. So what you actually want to do is you need to lag this. And I hadn't found, maybe y'all know a way to do this in Sierra, but the reason we made this signal lag series is that it's a ridiculously simple study, but Sierra didn't have anything like this that I know of. And so I want to take this fast minus slow diff, and I want to lag it 1 day. So that, let's see, I'll do chart region 2, and I'm going to do like, I don't know, so you can see that this is now, I'm not cheating. And I will overlay this one instead of the other one. So I will overlay the lagged value. So again, you could still probably run into an issue. You could still probably, yeah, so now this one has that, 45 or whatever. And now, let's see. Now it stopped working. Let's see. Let's see. So again, I'm overlaying the lag series, latest value, containing match. And then I want to trend, oh, that just popped off here, lag data. And then filter lag data. Now, it's kind of a funny one because you can see, all right, It's actually pretty decent. I so again, you lose some sharp, right, from what you had if you're cheating. So, but the return on risk units is not incredible. But again, and it's not that much on a return on one contract positions. But this is the kind of thing that it's a starting point, and what we've done here is there's no reason why you can't do this on a bunch of products because you've got volatility indices on a bunch of products. You're using a dynamic stop, which again is going to be, is going to adjust for you on the different products. And you're using a simple trend filter. Like there's no reason this idea isn't a potentially scalable idea. And so even though we've, sort of cheated here by twiddling knobs a little bit and um, looking at things in sample. I mean, one of the things you ultimately want to do is, put a whole bunch more days on this thing. Use as much data as you can. I think the only, using sound methodologies, not doing too much knob twiddling, not overfitting yourself, using a bunch of data, trying to do in sample, out of sample testing. And really, I think one of the best things is if you have a robust idea that is not, in principle product dependent, do it on a bunch of different products. And if the aggregate result looks good, you have some more confidence there. Again, not to say you can't, find yourself sort of higher order knob twiddling around these things. But again, one of the things I have an ability for you to do here is oh, and let's take this. Well, let's see, it's killing at the end of the day, but let's see if I can take this off. So that's actually kind of ridiculous. That boosts it a lot. I don't trust sharp ratios over 2, but that looks pretty cool. So that's taken off the. It's all of a sudden not trying to stop you out at RTH close. Um, all right. And the other thing you want to be able to do here is you can use start and end date times. So again, if you want to do an in sample out of sample test, right, you could say, let's do this. Then let's start from the beginning of the chart and use an end date time. That's, I don't know. I have 100, I have 90 days on the chart or something like that. Let's spend half of it. Let's do the first half. Whatever the first half is. You can do a little bit of knob twiddling on a little bit of your data, and then you look at the rest of your data, which is hopefully more, and see if the result decays dramatically out of sample. And if it decays dramatically out of sample, that's a sign that you've been overfitting. So, all this. I hope this stuff is not too old, let's say old news for you guys, but I hope this is useful. I will share the chart here. I think this is basically what I wanted to cover today, and I've taken about an hour. So if y'all have any specific questions, if you want me to go in any deeper on this, if you want me to go over, there's some new features that we have on that I'm not sure if y'all have seen. I don't remember if we announced them. Um, we've got we put on a low time frame version of Trap Traders, which will allow you to maybe gather stats on Trap Traders based studies a little bit more easily. Um, I think the other thing that we have is on dynamic delta pivots. Some of you guys, I think this is Vespa and company have been doing this by hand, but there's this option now to put the VPOC in there as the pivot instead of just the midpoint. So another cool feature we've got. Again, we released this PA zigzag business. I think the other thing I wanted to address is CP wasn't on here, but let me go ahead and talk about it anyway because I think it's useful, and I was getting asked this by someone else today, and the question is basically, how do you find bar settings for some of these studies? And the basic methodology for the volume-based studies. So I'm going to say basically the delta. So we've got the dynamic delta pivots, dynamic delta bars, all these delta studies, HTF delta P2P, trap traders, delta pivots. So a lot of these are working off of this same basic underlying idea, which is, what did I just do here? I accidentally put dynamic delta bars on there. I don't want to do that. Let me do this. So I'm going to duplicate though a 1 minute chart, and I'm going to duplicate another 1 minute chart. And so here's what we want to do. The basic idea here is we want to, let me erase all this stuff. All right. So a couple of things real quick. The easiest study to get a setting for is the delta volume oscillator, the DVO stuff. Is anything that uses DVO metrics, slap it on 1 minute chart, and then I'll tell you, it spits it out right there. Optimal 90-day DVO bar period, 475 volume. All right, so that one does the math for you. The other one is I've got this harmonic rotation study. It's basically, you can think of it as like it's just another, again, volatility measure for day traders based on price action. Maps reasonably well in some sense to the. It's a little more wonky and unstable than like your typical vol measures that other the pros are going to use or whatever. But again, retail traders got useful equivalent concepts too, and this one's very intuitive. So when you make swing high and low patterns is giving you these harmonic rotations, and so this one is saying, all right, your average rotation length for average harmonic rotation on ES full session, where we're throwing away the rotations kind of at the end of the day, at the end of the session, is 14.2 points. All right, and so what I want to do here to find the appropriate volume bar settings is I want to make this a volume chart. I'm going to do bar period. I'm going to do this as a volume chart. And I don't know, we can start at 1,000 volume. The basic idea is that, okay, volume volatility are very closely related, and we want to, so I'm going to do bar difference, and then I'm going to do average continuous. So bar difference is giving me the high minus the low on every bar, and the average here is taken, I'm going to just take the expanding average, so the average of the whole chart of the bar difference. And I'm not going to reset it into the trading day. And let's do that as 2, and then I'm going to erase. I'm going to hide this one because it's painful to look at. And all right. So what we really want to do here to find volume settings for ES, for these volume-based studies. Now, again, a lot of these have kind of standard ones that we like to use. So like, I don't know, 1,000 volume for the ES Delta products. But that is going to be picked by, traditionally, we've done it like this. We're looking for the volume setting that matches where the average bar width of the candle. So the average, where the average volume candle approximates average harmonic rotation. So how much volume does it take to move the product one harmonic rotation is what I want the bar setting to be at the higher level. And then these then the delta pivots. So this dynamic delta bars would be on the setting we find here, and then these would be on 1/10 of that. So same thing. I think on the trap traders you want it on the big setting. So trap traders, LTF trap traders, and dynamic delta bars you want on the big setting, and on the others. And then some of the more granular ones, you can start looking for on like delta impulse, look at 1/20th of the value we find here as a place to start looking. Again, a lot of these you're going to have to kind of play around with them and find what works for you. But this is what we like to do, and this is again the methodology here is what I would do is this is a little low right now as I want it to be 14 whatever. I was playing around with this earlier today, so this was maybe more like, I don't know, 30 right now. Let's see. Getting there, not quite. Let's see. Let's try 40. Okay. Yeah, getting close. Whatever. So you get the idea. Is you can twiddle the volume until you get something that where the average candle breadth matches your 1 minute harmonic rotation, and that's one way to calibrate these. Again, there's not really a right answer, but I like that methodology. This idea that you want to pick your volume settings based on the sort of time volatility of your product. Now, again, we've got a couple of ways to measure time volatility. Harmonic rotations is one. Um, the other one is the PA zigzag. Another one is you can look at move metrics is another one here. So again, a lot of I hope this was yeah. Thanks, Andy. I'm glad I'm glad this was. I hope this was useful for people, and I am glad y'all were able to come out today. And I'd like to do this on a weekly basis, and try to come up with something different every week, a different angle to explore on the tools and take kind of a deep dive. And it's really, I mean, it's crazy what you can build with these, and sort of the goal here is to do like um, code free. I like, code free, building complicated things without needing the code. And I like having, we've given you an erector set or whatever to wire these things together and express your ideas. And it's Sierra Chart's a really incredible platform to work in. And it's you can do some absolutely crazy ideas here where you can actually look at the stats for if it bounces off a fib and comes back to another one at a certain time of day. Like there's so many different trade ideas. You take just about any sort of rigorously well-defined intraday trading strategy, and we can do it here. Look at it in our tools in a way, and look at it in the stats collector. And I don't know if y'all have ever tried to use Sierra Chart's back testing stuff, but you'll absolutely drive yourself insane trying to back test with Sierra Chart's chart replay features. Which again, check it out if you haven't. But this, for being imperfect, again, you got to sanity check it. There's some things that aren't going to be, that aren't perfect about it. If you're doing level-based entries and not able to simulate, fill percentages and stuff like that, maybe Sierra's doing some of that. But, it happens very quickly. And again, going to depend on the study. If you got a ton of things going on in your chart, you can definitely crash it and overload it or make it really, really slow. But it's a good way to get sort of a quick and dirty idea of how your stuff ought to be working, and a sense for what kind of drawdowns you should expect on your products. And you can find something that, like, you've been trading an idea and having a rough time with it, and and you look at the stats and you realize, no, this drawdown's totally within normal, is to be expected. There are a number of ways this can be helpful. You can also totally shoot yourself in the foot in some ways by getting over fitty and greedy and not being careful. But again, hopefully a useful tool set. And yeah, I guess if no one's got any other questions, we'll shut it down. But thanks for coming out. But yeah, man. Uh, anyone want to chime in on anything else? And I'll get next time. What I'll probably do is get. I'll put next time we do this. I'm gonna put subscribers come in with, y'all can unmute yourself. I don't know what I was thinking about that today. I do want to have this as kind of like an open session for people who are kind of taking a peek. But I definitely, for the people who are subscribers, there's no reason y'all should come in here muted. I want y'all to be able to ask me questions in voice as well. So I'll take that mute deal off. We'll make another voice channel here for those of you who want to do some live trading in here. I know there's some probably better venues for that, but if that's useful, there's no reason we can't throw that in as well. So all right, well, if that's it, let's see if you have any other questions. Otherwise, dope. Well, y'all have a good one and have a good evening, and look forward to doing another one of these next week. I'll put the event up when I know exactly when that's going to be, but probably at the same time. I'm looking at Wednesday, Thursday night, roughly sort of 8:30 spot, maybe 9:30 some nights. But all right, y'all take care.